folks, welcome back. We are here with another daily silver video, and right now silver soars above $31 after Fed's bumper rate cut decision. Things are chaotic, and I'm going to keep you in the loop. We will be going over this article along with another one that just came out 10 minutes ago. Gold soars over 1%, reaching all-time highs above 2,600. So silver and gold are both doing incredible things. Silver's up to 31.14. The markets are crazy. You cannot be kept out of the loop. You cannot be blindly investing in today's day and age, especially in today's day and age. And with all the several things that are coming up over the next couple of months, like the huge BRICS meeting in October, the October 1st situation with the Federal Reserve, the November election, many more things. Make sure you click subscribe because I cover it all, folks, along with some big silver giveaways coming up as well. Click subscribe, click the bell so you don't miss the entry videos. And if you want to chance to win silver on a monthly basis, go check out the Secret Silver Society. It's a secret group for silver stackers on the 31st of every month. Each member gets a chance to win, so it's just a group for silver stackers to always be entering giveaways automatically since it's a membership, subscription-based platform. It's really cool. But anyways, folks, remember also I sell silver and gold and platinum and palladium for the cheapest prices. Slayer at milesfranklin.com or call me 330-485-6172. You will not be disappointed. So right now we are looking at this article from FX Street, silver price forecast. Silver soars above $31 after Fed's bumper rate cut decision. So that's, of course, from the aftermath of the Fed's policy announcement, which everyone was anxiously waiting for. The Fed cut interest rates by 50 basis points to 4.7% to 5%. Fed's bumper rate interest rate cut signals that inflation is on track to return to the bank's target of 2%. Silver delivers a sharp rally above the crucial resistance of $31 in Thursday's European session. The white metal strengthens as the U.S. dollar surrenders its early gains and declines. The U.S. dollar weakens as the dust settles after the Federal Reserve's monetary policy decision, in which central bank announced its first ever interest rate cut in more than 4 years. When we are going to see Federal Chairman Jerome Powell come out and say XYZ, a lot of people, before he announces whatever he's going to, the markets are very volatile. We actually saw it work into the downside beforehand, but then afterwards, markets corrected, and then you see what happened. There's so much speculation in today's day and age, and I'm still waiting for the time where, regardless of what stock market volatility does, silver's going to do what it does. Regardless of what gold does, silver's going to do what it does, because silver is used for completely different reasons than gold. So why are the prices so correlated? Now, I do think that day and age is coming, and that is mostly because of the fundamentals, like many others are mentioning as well. But along with some other things. But at the end of the day, right now, gold and silver are looking strong. Historically, lower interest rates by Fed bode well for non-yielding assets such as silver, as they reduce the opportunity cost of holding an investment in them. So if we know that there's a direct correlation between the dollar strength and silver's price and gold's price, and we know that the dollar inevitably is going to fail, then what does that mean for gold and silver? Inevitably will come out on top. I mean, it's a no-brainer. 1 + 1 doesn't equal 3. You don't got to make it more complicated. The dollar will not and cannot last forever. It is designed to fail. It's lost 98% of its purchasing power. So if we know that the dollar is going to fail, and we know that when the dollar does bad, gold and silver go up, that's literally all the confirmation you need to know that eventually gold and silver will come out on top. It's insane to even try to think otherwise. So for the interest rate guidance, policymakers see the federal fund rate heading to 4.4% by year's end, which suggests that there will be at least 25 base point more decline in interest rates. On the contrary, the CME FedWatch tool shows that central banks will cut 75 base point in the remaining monetary policies this year. So I'm not going to go over the technicals. I mean, if you guys are into that, you guys can pause and check this out. But that's basically what's happening. I guess we can look at some resistance levels and all that. So right now we are looking at the support, or this is looking like a $32.50, and that's what the 12-year high was, which it's approaching, which if we see that again, if we break above $32.50, we're talking about the highest price it's been since it went to $50 in 2011. And then we also look, it's looking like we have $29.50 near-term outlook, which it's steadily staying above. So yeah, right now gold soars over 1%, reaching all-time highs above 2,600. So it's looking good for gold as well. This came out 11 minutes ago, by the way, so this is fresh off the press. So gold surges to all-time highs above 2,600, fueled by expectations of further Fed rate cuts. Safe haven demand spikes due to escalation tensions between Israel and Hezbollah, which, by the way, that's a whole other situation beyond just these rate cuts and beyond what gold's going to do or silver's going to do. We have these geopolitical tensions that's also affecting the price. So it's looking like from any direction that you look at it from, it's all boding well, bullish for precious metals. So Fed Governor Waller backs 50 basis point cut. However, dissenting Fed member Michelle Bowman prefers a smaller cut to guard against declaring an early win on inflation. Gold prices climbed past 2,600, recording new all-time highs amid increasing speculation that the Federal Reserve will continue to lower borrowing costs and heighten tensions between Israel and Hezbollah in the Middle East. And that's gold trading at $2,621, up 1.3%. I'm curious, what is your average between gold and silver? Like, you don't have to say exactly how many ounces you have, but is there any type of ratio you use? Like maybe every 100 ounces of silver that you accumulate 1 ounce of gold. Or, do you have any type of ratio, or do you kind of just buy both when you feel like it? Or do you wait until maybe gold is lower? Like right now, you'd be buying more silver because gold's at all-time highs. You never want to buy something the most expensive it's ever been. But, I mean, we both know that they're going to be going up regardless. So both are still eligible to be buying. It's not like, I'm just curious because I talk to so many people per day and everyone has different perspectives on this. Everyone has different strategies, which is great. There is no, there's no one solution to everyone. Everyone has different financial situations, has different strategies, has more or less gold and silver than each person, will be stacking longer or selling earlier than each person, or got in at different price points, so your dollar per average cost is different than that person's. Everyone has different situations. But what is yours? I am curious. So it goes into talk about risk aversion, which is the game's name, which is portrayed by Wall Street. And this is posting losses between 0.26% and 0.31%. Fed Governor Christopher Waller stated that cutting 50 basis points was appropriate, citing expectations that the August personal consumption expenditures PCE price index would be very low. Waller added that inflation is softening more rapidly than anticipated, which is concerning to him. He also noted that the Fed could take further action if the labor market deteriorates or inflation data soften quickly. Now, there's so much that's going to be happening, folks. Like, there's so many scenarios that are going to be playing out from now till December, which I think they're actually going to mention some of these, but there's so much that's going to be happening between now and December that, anyone who is looking at prices on a day-to-day perspective saying, oh, maybe I should get in now or maybe I should wait, that's a risky game just because of how volatile things are. At the end of the day, whether you pay $31 for an ounce or $29.30 or $32, we're talking about pennies compared to how valuable silver is. Like, it's not like it from a year from now you're going to be like, oh man, I paid $29, I wish I could have got $30, because we're going to be talking about much different price points, or at least in the next couple of years. Just try to, especially, and this is my point, you cannot predict what's going to happen. A lot of people say, I'm going to hold off because I think next week's going to do this or whatever. We have no idea. These markets are not predictable to the slightest bit. We do know the overall scenario, the inevitable, what's going to happen, but the day-to-day, there's so much happening. There's too much happening, but it all is, at the end of the day, going to be bullish. Just the immediate term, it's just too hard to tell. Daily digest movers. Gold price trader eye next week's busy U.S. schedule. So yeah, there's a lot. This is all happening next week. This is insane. By the way, this article came out 10 minutes ago. So this isn't like this is something that was posted last week. This is next week we have to look forward to, which is why you got to subscribe, because I will be covering this all. Overall weakness on the US dollar and elevated tensions in the Middle East kept gold's rally underway. Bullion prices had risen, and this is over 27% in 2024, the biggest annual rise since 2010. China and India's physical demand for gold has overshadowed anemic inflows into gold-backed ETFs. And by the way, this is gold, but China and India have been buying record amounts of silver. India bought more silver in the first 4 months of this year than the entirety of last year, and they're actually going to be doubling that on top. Not talking about Russia or China as well, which China is now focusing on silver as well. So this is not just, this is not subject to just gold. Silver, there's a lot happening with silver as well. The U.S. economy will likely grow at a 2% pace in 2024, with the unemployment rate rising to 4.4% by the end of the year. December 2024 Fed funds rate futures contracting suggests the Fed might lower rates by at least 53 basis points, implying that in the following 2 meetings this year, the market expects one 25 basis point cut in November and December. But also remember what's happening on October 1st, which is them pushing that all central banks hold at least 4.5% of gold or something of real monetary value of a tier 1 asset. And that's right now compared to their 0% holding. And that is trying to combat the BRICS currency, which in October, the BRICS nations, Brazil, Russia, India, China, South Africa, and many other countries, along with 150 other countries joining this meeting, will be announcing their new currency called the unit. It's a digital currency backed by 40% gold and silver, real tier 1 type commodities, money. And that's, remember, that's 40% the unit compared to just 4.5% of the United States central bank. So, that's a big difference. Us pushing 4.5%, trying to combat that to make sure it doesn't just completely wipe out our dollar instantly. I still don't think that's enough, but regardless, all those countries throwing back their U.S. dollars to us, all that money coming back, all those dollars coming back, which the dollar is the world's reserve currency, is very frightening, especially since this isn't a bluff. Russia completely cut ties with the dollar several months ago, completely cut ties, so, and that's not going to be the last. So anyways, momentum favors buyers. Relative strength index, or the RSI, aims upward in bullish territory and not in overbought territory. Therefore, the path of least resistance is tilted to the upside. Interesting. So it's saying that it's going to look like it potentially could keep going higher because it's not in overbought territory yet. If it was in overbought territory, that means there'd be a huge correction coming because the markets are overbought, right? Then there's a correction, it dips back down a little bit. It's looking like that's not the case yet. Psychological 2,700 figure would be next in the event of a pullback. First support would be 2,600, followed by the September 18th swing low of 2,546. So that's basically where we're at right now. With gold and silver is sitting pretty at 31.14. Gold is sitting up 1%, and it's above 26 now, and it's looking like the markets are still looking strong. So anyone who is interested, remember, I sell gold and silver and platinum and palladium, and I will take care of you. We have some good prices right now. And we have Buffalo rounds 235. We have 10-ounce bars, low as 220. We have everything. Constitutional silver, 275 over spot. You name it, we got it for a good price. So anyways, I'm going to wrap this video up here. Remember, if you want to join the Secret Silver Society, then hit me up. I will, patreon.com/silverslayer. If you want to have a chance to win the giveaway in 11 days. And make sure you subscribe for the main channel giveaway. I'm not stingy with my giveaways. We do big ones. So anyways, I'm going to wrap this video up here. Thanks for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.